Mortgage rates barely moved this week, just one single basis point, from 6.04% to 6.05%. If you're waiting for a breakthrough to the fives, the market just sent you a message, not yet. But here's what that flatlining rate environment actually means for your next rental property deal, and why boring weeks can be the most dangerous ones to misread. Stay until the end. I'm going to show you exactly how your DSCR ratio can be the difference between a 6.75% rate and a 6.25% rate on your next rental property, even when the market refuses to move. The jobless claims shock. Why a strong labor market is keeping your rate stuck. On February 19th, the U.S. Department of Labor reported initial jobless claims fell to just 206,000 for the week ending February 14th, down a massive 23,000 from 229,000 the prior week, and well below consensus expectations near 225,000. That's not a small beat. That's the labor market telling the Federal Reserve loud and clear, we don't need your help yet. Bond markets treated the report as confirmation rather than a new story. Treasury yields held firm, and mortgage rates followed suit. For rental property investors, this is a double-edged sword. Strong employment supports rent growth and occupancy rates in your portfolio, but it also means any relief on financing costs is going to be gradual, not a sudden drop. The rate ceiling no one is talking about. Why low 6% is the new normal. Here's what's quietly reshaping the 2026 housing market. Multiple major rate trackers, Bankrate, Mortgage News Daily, the mortgage reports, all converged this week in a tight band between roughly 6.0% and 6.24%. Freddie Mac's benchmark recently hit its lowest reading since September 2022, with weekly averages hovering around 6.0 to 6.1%. The MBA put contract 30-year rates near 6.17% for the week ending February 13th. That convergence isn't a coincidence. It's a signal that the market has found a temporary equilibrium. Treasury yields and mortgage-backed securities pricing echoed that same range-bound behavior, with only small daily moves despite shifting headlines. The takeaway for DSCR investors isn't just about the number, it's about what stability means for deal structuring. When rates stop swinging wildly, you can underwrite with more confidence between contract and close. But that same stability also increases competition. More buyers are coming off the sidelines as the narrative shifts from painfully high rates to sticky but workable low 6% rates. Rates recap. 30-year fixed mortgage rate started at 6.04% to ended at 6.05%. A 1 basis point move, essentially flat. DSCR loan rates, which typically carry a premium of 0.50% to 1.00% above conventional 30-year fixed rates, held in the 6.55% to 7.05% range this week for comparable credit profiles. No meaningful movement in either direction. Professional analysis: lock now or wait for a breakthrough that may not come. A labor market this resilient, with no major catalyst pushing yields lower, tells us the low 6% range isn't a launching pad to the fives anytime soon. Stop managing rate risk by waiting and start managing it by structuring your deal better. If you're within 30 to 45 days of closing, lock it in. If you're still shopping, buy right on price, rents, and expenses. Don't bet on rate relief. Now let me unpack the strategy I promised you. Optimizing your DSCR ratio. Most investors focus entirely on the rate itself and ignore the one variable they actually control: the relationship between your property's net operating income and your debt service. Here's the insider move. A DSCR of 1.20 or above typically unlocks meaningfully better pricing than a borderline file sitting at 1.05 or 1.10. Strengthening that ratio through higher rent properties, interest-only structures that improve cash flow calculations, or simply avoiding deals where the numbers are marginal can be the difference between a 6.75% DSCR loan rate and a 6.25% rate. In today's stuck at 6% environment, that gap compounds into thousands of dollars over the life of the loan.
And just like that, these are already old news. Thanks for watching. If you found this video helpful, give it a like and subscribe for more expert insights on real estate investing. If you are ready to take the next step or have questions, call or text me at 718-300-3503. I'm here to help you understand the market, find smart loan options, and turn today's challenges into tomorrow's cash flow.
If you want to learn how to use financing to grow your portfolio, check out my DSCR loan tips and tricks playlist. Inside, you'll find powerful strategies, lender insights, and real-world tips to help you close more deals and maximize your cash flow.